Hi, I want to talk to you about wars and how they affect the market. On our first chart, we show wars in the past and present. So the one to the left shows Desert Storm, and that was 1990 to 91. And what you see happens is the market goes down in anticipation of the war, and then when the war started, the market took off to new highs. And that's pretty normal for most wars if you look in history. The middle chart, which is actually when U.S. invaded Iraq, 03 to 03, February, you'll see that in the beginning of the chart, the market was going down in anticipation of the war, and then it started going up right before the war started, and then continued going up after the war started. The third chart to the right is where we're at today, and you can see that the market actually started going up after U.S. invaded Venezuela. And then it kind of goes sideways for a little bit, starts heading down for anticipation of a possible another war. And then U.S. and Israel strike Iran. And where we're at right now is the market, as of when we're doing this video, is down a little bit from when it started. We think it's going to head off to new highs just like all prior wars. In fact, the next chart shows the time you have any kind of major conflict anywhere in the world. And what you'll see is that it almost always goes up. And in fact, if you look at the bottom, on an average, 1 month after the war begins, the market is up 0.39%. 3 months after the war begins, it's up 1.3. 6 months, it's up 5.68, and 12 months, it's up 5.13. So although the news is kind of on the negative side and we're a little worried about the current situation, we think you should be investing in stocks right now based on past examples of wars. I want to thank you for joining us today. Thanks.